Hey everyone, very good evening. Just a moment. Yep. So, once again, very good evening everyone. Before I proceed, I would like to confirm, can all of you see my screen and can all of you hear my voice? Is everything clear? Can you quickly confirm that using the chat option or the live chat option in YouTube or the direct chat option available at the right corner, top corner in the Discord? Can all of you see my screen and hear my voice clearly? Alright, so yep, thank you for confirmation. Just a moment. So once again, welcome back to the analysis of Nifty and Bank Nifty. Also, we're going to cover the crude oil, which is presently live by using Bookmap's order flow tools, and the overall session is powered by TrueData. So today we have many things to discuss in the first half of the session. So I'll be discussing about the basic framework that we go through in a detailed manner. Okay, so basically how to analyze the price and everything that goes in the first half. And second half I'm going to dedicate to discuss about a few of the indicators that I regularly use, basically the footprint charts and the absorption indicator and other indicators as well, how to combine them and take the effective decisions using the Bookmap tools that I will be discussing in the second session. Yeah, I can read your message ASAP. Alright, so before I begin, a quick disclaimer. Any information that I'm going to share from now onwards is going to be an educational information. Don't consider it as a buy or sell recommendation. Any decision that you take in trading or investing are subject to market risk. So let's quickly get into the subject. So basically what you are presently seeing is a Bookmap tool. We will come to this at the later section. So we have a certain framework. Okay, so basically the framework goes like this, and don't worry, I will explain you in detail what exactly that means and how to analyze it. So it's called as TLE. Okay, so the first step is to identify the trend, okay, in terms of the price, where exactly primarily where the market is heading. That's what we will be analyzing in the first step. And then second, we will be identifying the locations or location where we can monitor the price action so that we can take effective entry and effective exit at specific locations. And the third stage, we have an entry and exit. So that's where we will be getting an entry signal and exit signal based on the Bookmap tool. Okay, so when it comes to, I'm going to spend a little extra time on identifying the trend because that is what the key of the entire session. So basically any order flow tool that you use, without understanding the fundamentals and without understanding the basic structure of the price, that means that you are leading, you are heading in a wrong direction. So basically you have to align with the primary direction of the market, whether you use order flow or any particular indicator. Especially order flow, having the right context in the mind is absolutely important in the first place. So that's what we will be doing in the first step. So what exactly I mean to say is that let's start with the Nifty. Okay, so this is an AMI broker software, so basically which helps us to plot the chart, and I'm using the TrueData data here. Right now the crude oil is running, but I will shift it to the Nifty underscore I, which means the present continuous future. So I'm presently looking the information in 30-minute chart. Okay, so what I mean to trend is basically there will be a structure in the price. Okay, if you already been to price actions, you already have an idea about it. If you don't know about it, so it's straightforward that market moves in a zigzag manner, and if it is making continuous higher highs and higher lows. Okay, so until when this particular structure continues, we can call it as an uptrend. So primarily market is moving in the upward direction. When this is the case, we will look for long opportunities either at the last resistance, which may act as a support. When price approaches to the last support, we will try to align with the trade by placing a long trade based on certain signals. We will be discussing about that in the later section. Or the breakout of last swing can also be one of the significant entry when we know that primarily market is moving in the upward direction. This is point 1. And point 2 is in the similar way, when market makes a lower lows and lower highs. Okay, so when this particular pattern continues, we can call it as a downtrend. So when we know that primarily market is moving in the downward direction, it all makes sense for us to align with this particular direction using certain information that is thrown by the order flow that I will be discussing in the later section. So basically the context is absolutely important in the first place. That's where we will be identifying the basic present trend of the market. So this is second information. And third trend, you all know that when the market is trading within the tight range or kind of this pattern, triangle pattern, so then we can say that market is choppy or market is moving nowhere. In that case, it all makes sense for us to be outside of the market, or if you want to trade, so you can simply chop in the market. So whenever market approaches to the lower range, you can buy, and whenever market approaches to the high, you can sell based on certain signals. So this is an importance of identifying the trend. So where you will be identifying primary direction of the market based on the structure. So with respect to Nifty, okay, can any one of you tell what trend the presently Nifty is trending in? So this is the trend of Nifty 30 minute. Can anyone tell in which direction the market is presently trending? Range bound, great. ASAP answered range bound. Pro yard sideways, brilliant. So the moment we see the price presently, especially this is one of the key information. Whenever we see such volatile movement, simply mark two lines. So something like this. Okay, so basically just a moment, draw the triangle. So you have the upper range and lower range. Presently market is moving from volatile to non-volatile range. Basically this also one of the pattern that we can see. Okay, so at the present moment, until unless market stays within this triangle, we can call it as a range bound market, point 1. And point 2, any directional momentum, so either upward or downward, that directional movement has to happen. That means price has to fall, or price has to come above or below this particular, beyond this range. That's the important thing. Whenever the volatility kicks in the market, simply mark that range and wait for the price to break those levels, break those particular price ranges, or try to identify the internal structure. So if you want to capture the bigger momentum, then the break of this entire range is quite important. So basically if it breaks the lower level, then the possibility of market moving in the lower direction is quite high. If it breaks upper level, market moving in the upper direction is quite high. This is pretty straightforward. So this is one of the contexts that we need to understand. So at the immediate momentum, so basically this triangle pattern is very important. Until unless market stays within this triangle, we can call it as a sideways market. So if price comes out of this and start to accept above this, then the possibility of market hitting at least to this particular range is quite high. Range high is quite high. Break of this can bring the bigger momentum in the market in the long direction. Similar goes to short direction as well. Okay, so once you know this context, we can play this context in the order flow information. Okay, so second information or second instrument is bank Nifty _I. So as you can see here also the same context, almost the same pattern, that presently market is trending in this particular triangle, and we have two ranges which has created a volatile movement in the market. And the same context, the price has to come out of this particular band to create the immediate momentum, and it has to break this or this particular level to get the trend confirmation. So basically if it breaks this particular level, the bigger momentum in the upward direction is quite possible. So it is the same context as Nifty, there is no change. So with respect to this information, we know that presently market is trending in the sideways market. So in that sense, it all makes sense for us to look for the buy low and sell high strategies. Okay, so if this is clear to you, then the second point that comes in, basically like, just a moment, identifying the immediate support and resistances. That's what the second step is all about. So that's where we will be identifying the immediate support and resistances. Yeah, so this is the present range of the market. Okay, so for tomorrow's market, this low is also very important, which is the today's low, for tomorrow it will be the previous day low. So this range is very critical for tomorrow's market, and whenever market approaches to the lower levels, you can still look for buying opportunities. Whenever market reaches to higher levels, we can look for shorting opportunities based on the present context. Okay, so same goes with the Nifty as well. So if these 2 points are clear to you, then we have to move on to the third step, where we will be looking for an entry and exits. But before that, still we are, I think we are, just a moment, we have live ticks on crude oil. So I have an immediate question to you with respect to crude oil. So this is a crude oil 30-minute chart. With respect to this, can you tell which way the primarily market is moving, whether it is an uptrend, downtrend or sideways? What is the context with respect to the trend? Okay, pro yard downtrend, cool. So there is one more trick that I wanted to tell you. So basically, yeah, that's the right answer, ASAP and pro yard. So basically market is moving in the downward direction. So primarily, if you observe how to identify it, so basically see, if you from this particular point onwards, any short movement, if you observe, so this is where we saw the pullback, this is where we saw the pullback, and this is where we saw the shorter pullback. So if you observe the entire trend, okay, so the momentum in the downward direction is bigger. So that's basically one of the characteristics of the downtrend. So presently, no doubt that primarily market moving in the downward direction. Okay, so it is clearly evident. But at the present moment, you can see that there is a shift in the immediate trend. It is not primary trend reversal. We can call it as a micro trend reversal. So if you observe that from this point onwards, okay, so there was a pullback, and there was again a selling attempt that failed to reach last low. Okay, last low was still a secured one, so it is not yet broken. In that sense, market is starting to create this pattern at the present moment. So we are seeing the second low here, again selling attempt failed to reach the last low. So it basically forming the higher high and higher low format in the micro trend. So with respect to this context, to get the trend complete primary trend reversal, which high has to break? This high, the last major high, the major selling that we have seen from 6419 roughly. So that level has to be broken to primarily change the trend in the primary trend change in the market. So until unless we can look for a long opportunities, but till this particular level, right? So in that case, we have an immediate scalp till this particular point. Or if you are like a conservative trader and look for bigger opportunities when market approaches to this, okay, why this particular level? Because we have a support level here. So this is where we saw the pullback, and the same support can also act as a resistance. That's the basic theory, polarity theory of the price action. So the same level acts as a resistance when price is trading below that. Okay, so in that case, when market approaches to this, okay, so here we have an immediate scalp opportunity here if you are a scalper to this particular level, or if we get any opportunity to short here based on certain confirmations that I will be discussing when we move on to the order flow information. So based on that, we can look for a shorting opportunities when price approaches to this level by simply targeting the low, or we can continue to trade that particular trend by keeping our SL to the swing highs. So this is how we read the context. Context plays a critical role. Without understanding the basic context, if you try to do something either with order flow or any particular information which will not make any sense, unnecessarily you will end up making lot of trades, and which will result in losses. So that's the basic information, and I think it's about to hit the 6182. So let's quickly move on to the next step. So by any chance, if you have any particular questions on the price action part or basic understanding of the context, please let me know in the comments, and after that we will move on to the next stage where we will be discussing about bookmap tools. Any questions on it? Shall we draw higher low from the wick or close? So wick. So basically this is the basic theory of price action. Okay, so we have to consider the high and lows, or you can also consider it as a zone. For example, in this case here also we saw one of the pullback, right? So from this, follow my cursor, in that particular case we can simply draw one of the the rectangle, and we can simply mark this as green. So last it was a demand zone. When price approaches to this level, there is a possibility. So this is not the line, this is a zone itself. So basically this low and this low, so together we have formed a zone here, demand zone. Okay, there is one more wonderful question from ASAP, who is asking how to trial stop losses with swings high and swing lows. Okay, so it's pretty straightforward. When we have this particular pattern that is forming, so it is it is not that easy to identify the effective swings in the live market, but in some cases. Okay, so just a moment, give me a moment. When you identify, when you identify this kind of pattern, okay, for example, assume that you have taken the long entry when market breaks the last swing, and obviously you know where to keep your stop loss, last swing low, right? And again, when market breaks the next swing high, you can move your stop loss to this particular low, which was your initial stop loss, to this particular low, the next swing. The same continues as and when market holds this particular pattern, you can simply trial your stop losses and secure your profits. So don't worry about it. So basically we will be we have certain tools in Bookmap which will help you to identify the significant swing highs and swing lows based on the volume information. So I will be discussing about that, but having the context understanding is very important. If you know this particular thing, then we can move on to the next step. I hope that is clear. Clear. So well, I think everything is clear. If you have any particular questions, you can shoot it out in just a moment. Yeah, you can ask them in the chat box. If there is no questions, if everything is clear, we can move on to the next step, where we will be using the Bookmap tool, order flow tools. Yeah. So this is what the order flow information that you see when you open the Bookmap chart. So this is the bare minimum chart that you will see when you open the software. So I will quickly try to explain what exactly it is. So basically the one that you are seeing here, the red and green lines, are nothing but BBO indicator, best bid and best offer. At any given point of time, if you open a depth of any instrument, you will see 5 best bids and 5 best offers. So the initial available best and best offer, so that will be considered and that will be historically stored. So what is the benefit of it? The benefit is that when we enable, so for example, if I enable the candlestick chart, this is a 15-minute chart, 15-minute candlestick chart. Okay, the main advantage of BBO indicator is that it helps us to identify the structure within the candle. For example, let's say this is a open, this is a close, and this is where the market opened, this is what the high and this was the low. So by just looking into the candlestick charts, we will be able to see OHLC data, but the BBO indicator helps us to look into the structure within the candle. So if you observe the entire 15-minute activity, this is how the structure looks like. So there was a sideways, and again it's a break, and again the market moved in the downward direction. So this is the basic advantage of using the BBO indicator, that we will be able to identify the structure within the candle. That means we don't have to wait for the candle confirmation. We can simply get in or get out of the trade before even confirmation of the candlestick. So we don't have to wait for certain time to complete. That's the basic advantage of it. And then we have a bubble indicator here. Just a moment, let me disable the candlestick chart. And okay, how is it different from chart at 1 minute, please? Okay, Pro ad asking what will be the difference between 1 minute and this. So it happens with respect to the immediate change in the market. For example, let's say the best bid has changed from 1 to 2, that will be immediately stored here. So the BBO indicator, not an executed price, it's basically the change in the best bid and best offer, which is nothing but identifying the immediate supply and demand in the market just using the BBO indicator. And wherever you see this bubble, that's basically an indication of the executed orders. So as you can see here with color, you can clearly understand that if it is red, if it is a red bubble, it is a sell order. If it is a green, then it's a buy order. But the main difference is that software considers only the executed orders. That means whenever there is a market order placed, so market order will be automatically executed, right? So that information will be stored and bifurcated as a green and sell or a green and red order. So if it is green, it is a buy order, but to be precise, it is a market buy order. And similarly, the red indicates the market sell orders. So what is the difference? I mean, what exactly we can do with it? Basically, first thing is that we will be able to see whether the volume that has accumulated here, was it a selling order or was it a buying order? Basically market buy order, market sell order, point 1. And point 2, we will also be able to identify the relative difference between two price levels. For example, let's say here it is red, okay, red bubble, and here also it is a red bubble. But relatively, if you compare both of them, the more of the orders got executed here. How I am able to see that? So basically, we are seeing a bigger bubble here and we are seeing a smaller bubble here. So comparatively, it gives us the relative difference between the number of transactions that happened. And second important point is that it also helps us to identify whether it was a market buy order or market sell order. So don't worry, how to utilize this information to take effective decisions, I will be discussing about that. So I hope this is clear. Then we will move on to the next point, which is basically the, just a moment, yeah, which is which I regularly use, basically called as an absorption indicator. One of the most critical indicator which will help you to filter out unnecessary swings. So as you can see here, so if I zoom in a bit, okay, don't worry what is absorption indicator, I will give you the immediate glimpse on it. So basically there will be a lot of up and down momentum. So right, so there will be a lot of up and down momentum. When you include an absorption, you will be able to identify within this particular structure, the BBO structure, you will be able to identify the prominent swing highs and swing lows. For example, all right, so if I zoom out a bit, okay, so I will show you the Nifty chart. So if you observe this, there is a lot of structural differences in the overall BBO indicator. But when you include the absorption, so here we have an So here we have an absorption. Here we have an absorption here and here, here. So we will not be confused with a lot of structures here. So basically with absorption indicator, we will be able to identify the prominent swing high and swing lows. That is one of the use case. And second important point is that we will look into the settings of absorption indicator, then you will get to know what exactly it meant. Like, so in this case, you can see the condition of absorption is such that if within 2.5 seconds, okay, if within 2.5 seconds 5000 quantities are getting executed, okay, so this is a manual value that I have put out at the present moment. We can also dynamically change it. I will explain that. So the condition says within 2.5 seconds, if 5000 orders getting executed for a specific price level, then this will be considered as an absorption. So what it means is that, for example, market was moving in the upward direction and suddenly within 2.5 seconds, the maximum number of orders got placed here and price started to move in the downward direction, which tells us that someone placed an aggressive buy order considering the market buying momentum, but at the same time those market buy orders, more than 5000 buy orders got consumed within 2.5 seconds. So which means someone was already sitting here with such quantities as a passive seller. You're getting the point? So obviously, if it is a market buy orders, there has to be the opposite to that, there has to be a passive sell order. So that indicates the presence of passive sellers. So this is what we call it as an absorption. Okay. So similar goes with here. So market was moving in downward direction and suddenly there is a huge market sell order that consumed and market again started to moving in the upward direction. Those who sold here, that market sell orders got consumed by whom? Passive buyer. So the absorption indicator will help us to identify the presence of passive buyers and passive sellers. Perhaps it will help us to identify the prominent swing highs and swing lows. That is one of the use case, and also we can utilize absorption indicator to trial our stop loss or also use it for entry. So if this is clear to you, then we can move on to this is how we use the absorption indicator. Presently I am using a manual setting here. You can make it automatic. So there is an automatic mode. If I enable that, we will be able to see two important parameters. Number one is SD interval. So basically the look back period. Okay, look back period, presently it is 15 minutes. So after 30 minutes, make it as 30 minutes. So ideally you can change it to any particular time period. The lesser the time period you look is basically the value will be more dynamic, but 30 minutes is a more reasonable time frame for any intraday trader to look for. So that's why I am keeping it as 30 minutes. Only keep it 30 minutes after completion of the 30 minutes of the market. So for example 9:15 market opens, after 9:45 you can keep it as 30 minutes. Until that you have to change the bracket. For example, if you are looking the market after 9:30, you can simply make it as 50. So then you will be able to see the accurate data with respect to the past information. So what it does is that, for example, if I'm keeping it as 30 minutes, okay, if I'm keeping it as 30 minutes, it look back the last 30 minute information of the average order volume and it multiplies it by the SD multiplier. That's what it does. So if I increase the SD multiplier, the signals will be more. If I decrease the multiplier, if I increase the multiplier, signals will be less. If I decrease the multiplier, signals will be more. So this changes from instrument to instrument. Usually for Nifty and Bank Nifty, 5 works out to be the better one. So that's where we will be able to see the accurate prominent swing highs and swing lows and also the absorption data. So with respect to this, you can see now this particular information will be dynamically calculated with respect to the setting that you have given here. So automatic mode is suggested if you don't want to get confused. So dynamically that will be selected. So this is how we use the absorption indicator. And let's check the just a moment. Let's check out the crude oil. In that particular case, absorption indicator, presently automatic mode. 4 I am presently using for crude oil. I am not a crude oil person, so presently it is in live. That's why I am taking an example of it. So you can change and adjust this particular setting according to the visual factor of the absorption indicator. So 4 looks to be fine for me, so I am keeping it as 30 minute automatic mode. At the present moment, it is considering it as a 30 volume. So wherever the volumes exceeds more than 30 orders, 30 quantities, within 2.5 seconds, that will be considered as an absorption. So which we are seeing at the present moment. Here is where we are seeing a absorption in the crude oil at the present moment. Okay, since we are looking for an immediate buying momentum, okay, so break up this, there is not much of a room. That's a different story. So the break of this particular level, because we are seeing an absorption here, the break of this particular level can bring the immediate momentum. Okay, so in that case, assume if you are looking for a buying opportunity, your buying order should go here, okay, above this, and your basic SL will be this. And once the market breaks here, once market takes off your order, you can keep your stop loss here and you can continue the same pattern. Okay, so within this, for example, let's say just a moment. Yeah, so in this case, for example, assume that you have already taken an entry and you are keeping an initial stop loss here. Again market took another reversal and again it is breaking a further high. So you will trial your stop loss from this level to this level. The main advantage of BBO indicator here is that before even the confirmation of the candle, so it is not time dependent, it is basically the activities dependent, right? So we don't have to wait for candle to be formed. So basically with respect to the available structure, that is the available structure in the BBO indicator, we can simply trial our stop loss as and when the pattern continues in our favor. Okay, this is one of the use case of the this absorption indicator. We can use it as a trailing stop loss and stop loss level. And second important point is that we can also use it for entry confirmation as well. So see, as at the present moment we are seeing an absorption here, right? That is a presence of passive sellers. So at any given point of time, price should not trade above this. So for us to take long trade here, so if price, okay, so If price breaks this particular level, then possibility of continuation of the downtrend is quite high. So this is just basic example, rough example. So I hope this is clear. Okay, absorption indicator. If this is clear to you, okay, if you have any particular questions with respect to this, you can ask me in the chat box. I'll try to explain it, or we can move on to the next indicator. Yeah, this tone flicks, don't worry, this session will be recorded. You can replay and you can anytime you can learn it, so you can revise the informations. Bookmap works with forex fairs. You can please check it out with the Bookmap team, so they will help you with this. So at the present moment we are analyzing the Indian market. With respect to that, I can give, yeah, one more important point I wanted to explain you, that absorption indicator will not be by default installed when you get the Bookmap Pro version. You have to go to the bookmap.com and just a moment, it's in Hindi. Yeah, so bookmap.com English. In this, if you go to the more knowledge base, you will be able to see the data points of all the information that you will be able to see the basic kind of blocks on add-ons. So in this case, you need to visit add-ons and then go to the absorption indicator. All the available add-ons will be available here, and go to the absorption indicator. In that you can see the download link. So you need to download the absorption indicator from here, and once you download it, you simply have to visit this configure add-ons and then simply add. Then you have to select the downloaded indicator and you are good to go. So your indicator will be added to here, and you can enable the absorption indicator from this point on. Okay, ASAP is asking how to identify that absorption is a new limit buyer or seller or stop losses. See, at any given point of time, if the presence of absorption indicates a presence of passive buyers or passive sellers. Why? Because see, for example, in this case, whether it is a stop loss order or normal order, it doesn't mean, it doesn't make any difference. So here assume that there was a market sell orders, right? So many people have sold the market aggressively. But the question here is around 79 quantities got executed within 2.5 seconds, right? So that indicates the presence of someone passively consuming those aggressive sell orders, whether that was in a kind of a market sell order or basically the stop loss market sell order. That doesn't make any difference. So the concept is that the aggressive sell orders got placed here at the same time within fraction of seconds. The more of the passive buyers consumed those market sell orders. So that's the basic information that will be considered as an absorption. Okay, so I hope that is clear. Yeah, we are seeing kind of sell off even before reaching this particular level now. So any particular questions with respect to this, or else we can move on to the footprint charts. Okay, could you please explain what happened just before 11:30 a.m. please? Okay, so in Nifty or Bank Nifty, which instrument you want me to explain? ProAd? Okay, Bank Nifty. Just a moment. Around 11:30, there was not much of an activity today with respect to Bank Nifty. It was kind of a choppy market. However, considering the low, okay, Nifty you want me to look at, right? So 1130 is where I think here, right? So there is not, see, that's what the thing is. So as per the context, as per the framework, the second step is to look for specific locations, right? So basically, if the price, for example, let's say after 10:30, okay, so that means the first 1 hour is completed. Assume this was the low, okay. So IB high and IB low plays a critical role, all right. So when price approach this particular level, we can see 1, 2, 3. 3 times there was an absorption. There was an absorption just below the IB low, all right. So which indicates what? Someone is passively consuming the selling orders just below the critical level, which indicates a presence of passive buyers and possibility of market reversal. So it may be a strong reversal or it may be a decent reversal. Today market entire trend was in kind of a choppy market. So basically we saw the decent movement after that. So first thing is that trend, and second thing is the location. We don't look for the information randomly. We look for certain informations at a specific locations. That's why we have the second step, which is to identify the specific locations where we can monitor the price action. All right. If you ask this particular thing, yes, of course. I mean, in this particular case, if I zoom in a bit, okay. So for example, let's say there is two conditions happen. One is that there was a market order which placed around 8,400 quantities got consumed, and those are the passive sellers. And similarly the same goes here, around 6150 quantities again got executed as an absorption, which indicates a presence of passive buyers. So almost if you compare the quantity, there is not much of equivalent activity happened over there. There was not much of an activity over here. But if you look into this particular information, okay, after completion of 1 hour, so just give me a moment. Yeah. So after completion of this was an IV low, right? This was basically the 1 hour low where we are seeing continuous absorption from the passive buyers, okay. So yeah, it was a balanced action at 11:30, but when price approached to the critical level, we need to be very cautious, and with respect to our context, we need to take decisions. That's the basic idea of having the framework in the mind. First step is to identify the trend, second step is to have the specific locations in mind, and then we need to wait for the price to approach to that particular level so that we can monitor the price action, and then we have to take certain decisions based on the pattern that is been forming. I'll try to give you one of the example, okay. So forget this chart, just it's a hypothetical example. Assume it was a IB high and IB low, okay. So assume that we were looking for a long opportunities based on the trend, okay. So when market approach to this particular level, which is kind of a support level, right, we are seeing an absorption, which is a good sign because we are looking for a long opportunity and we are seeing a presence of passive buyers. So that is a positive point for us as a long opportunity seeker. So in that particular case, assume market made one swing high. So we want the pattern to be formed here in the BBO indicator itself. Assume that we are seeing one more absorption, the indication of a passive sellers, and again market took the short reversal. The break of this is a kind of significant entry, we can say. So for long trade, this is one of the wonderful opportunity to get into the trade by keeping the stop loss to the last absorption. So until when market reaches to the IB high, so we can simply continue to keep our trailing stop loss active based on the absorptions, and similarly we can target the high itself. So this is how you have to combine the context and then take the decisions. I hope that is clear. Yeah, today it was a sideways. That's what I mean. The context is sideways, right? So in that particular case, I said that either it is better to be out of the market, or we can look for buy low and sell high strategies. It's as simple as that. So I hope that's clear. Or you can also, with respect to the context, we can also trade in options. So since we have an opportunity to sell the options, so you can look for that. whenever there is a possibility of a sideways market, you can simply, you know, write call and put options, the weekly call and put options to certain ranges where you see the major support and resistances. For example, in this case, let me shift it to Nifty. So in this case, we know that this is one of the critical level, 18,064 and 17,470. So we have certain range. So we can simply write call and put option to these levels. I mean OTM call, OTM put for these levels. We can simply wait for price to break this level. So that is also one of the strategy you can deploy when you know that market is presently trending in the, you know, sideways market. So that's the basic understanding of it. Okay, yeah, strangle sell. Alright, so this is how we, you know, understand the overall context, and based on that context we will get into the trade and get out of the trade based on the opportunities available. And one more point I wanted to discuss today, so basically that's called as a footprint chart. So just give me a moment, I can show you in the live itself. This will be by default enabled and by default installed in the Bookmap, so you can simply enable footprint chart. So there are so many settings. I have made a separate, you know, live session. I think 2 to 3 times I have discussed about it. So basically I will discuss the few important points here. So first thing is that we are looking into the footprint bar type with respect to the time interval. So as per the time interval, we are looking for the footprint bar. So it is 15 minutes. That means we are simply looking for the footprint information of 15 minutes. Don't worry what it does and how to use this information. I'll come to that point. So try to understand the basic setting that is being used here. Okay. And bar width and all is basically the, you know, graphic setting. If you just change it, so obviously the bar width will be changed. So I don't want to change anything over there. So I want to keep it as 100, which is the default setting it seems. So and then background type is, there are so many settings. Okay. I strongly recommend, if you want to understand all the settings, I strongly recommend you to watch our last session, so you'll be able to understand it. Presently I'm using histogram delta plus and minus, so which will help us to identify the presence of aggressive buyers and aggressive sellers in a detailed manner. So basically that's what you are seeing here. So this is a footprint bar, in that we are able to see different columns with the different shades and colors. So I'll explain that. Basically, if you select histogram delta plus and minus, we will be able to see the color shaded information, so which will help us to identify the aggressive buyers and aggressive sellers presence. Okay. And then we have just give me a moment, use shades is a recommended option. If you don't use it, so you will be able to see the plain colors. So shades will help you to identify the significant level. So it's highly recommended that you use this with the shades. And buy and to sell, so it's basically the information of the text. So if I zoom in a bit, you'll be able to see the left side information that we are seeing here, right? So the left side is basically the market buy orders and market sell orders, and the right side information is basically the market buy orders. Okay. So this B into S, so that will help us to you know, plot the text with buying and selling differentiation. So sum means summation information we will get. You can see this is basically the how much number of orders, the total volumes that will indicate. So it is the you know, I basically use B into the S. So basically in that case you will be able to see the aggressive buys and aggressive sells on a separate note. And then the important information is that the tick multiplier. This is so damn critical, because based on this only the entire visual aspect of the footprint depends on. So basically I'm giving it as 3. That means whenever we are subscribing to an instrument, okay, for example in this case assume that, okay, TrueData and Nifty, okay, while subscribing to the instrument it will ask for the tick size, right? So if you want to use the footprint chart information, it is highly recommended that you keep it as 1. That means for every 1 point it will consider it as a tick. Okay, so if the tick is 1 and your multiplier is 3 multiplier by 1, so total 3. So that means for every 3 point of a movement, 3 point of range, it will consider one particular column. So for example, assume this is one of the column, right? So one of the bar that we are seeing here. So it is happening, the overall information that this particular bar contains is basically the range of 3 points. So that is calculated by using this. So if you change this, the width of the bar will be changed, and according to the visual factor you need to change this from instrument to instrument. So for Nifty I'm using it as 3, sorry, for Nifty I'm using it as 3, for Bank Nifty I'm using it as a 6 multiplier, provided our tick size is 1. Okay, so now the question is how we can use this information so that we can effectively utilize this when it comes to the practical trading. All right, so how to do that? For that, the basic understanding is very critical. So what this information shows us, so basically in this, as you can see, this is a completion of the 15-minute. In that, the first thing that it helps us to identify the profile of the entire 15-minute period. For example, in this case, this is a kind of a profile that we are seeing, right? So with respect to this, we can see that this is the level where we are seeing maximum number of seller, maximum number of market selling. Okay, we can call it as an aggressive selling as well. So in that case, it will help us to identify the maximum number of transaction happened area, point 1, and point 2, it will also help us to identify whether they are market sell and market buy orders. So how we can use this information? For example, assume that if you are in this case, okay, so you have taken a short order, okay, short entry, okay. So in that case, okay, so assume it was a major support and we are seeing maximum number of selling that is getting executed just below the support, okay, which is not a good sign for any short positions. Why? Because see, this is a basic behavior of the people, right? So whenever market is in a panic, everyone want to dump their positions, everyone want to sell the market, and that's what is happening. And the more number of market sell orders indicates what? Presence of market buy orders, presence of passive buy orders, the limit buy orders. So that we don't want to happen. Suppose if the market, for example, in this case, we are seeing maximum number of market sell orders here. Until unless price sustains below this particular level, that indicates what? The sellers who entered here aggressively are, good enough or strong enough to defend their positions. That's why the price is presently trending in the downward direction. So that indicates a validation of those selling. If by any chance after formation of this particular pattern, if price, assume, I'm again repeating it, so we are assuming that there is a major support or a key support that we are monitoring at the present moment. Okay, so in this case, assume after the same pattern market started to make the reversal. That means what? The one who sold here is unable to control or unable to defend their positions, and possibility of them liquidating their position is quite high. If they start to liquidate, that will result in short covering. So result, we will be able to see the strong reversal. So the same condition, if you are looking for a long opportunity based on your context, if you are looking for a long opportunity, the same pattern can be utilized. If price sustains above this particular level, the maximum number of transaction happened level, you can simply look for long opportunity. So that's how we can use the information of footprint charts. I hope that is clear. If you have any particular questions on it, feel free to ask in the comment section. So whatever the information that you see, having the basic understanding of the context and playing that context is absolutely important, that you have to align. So that is very critical point. Okay. Yeah, there is a wonderful question from Proyad asking, shall we give importance for first 15-minute footprint in Nifty and BNF? Yes, absolutely. First 30-minute or first 1 hour plays absolutely critical role, especially for intraday perspective. So definitely, especially the first 30-minute defines the range of the market. So as per the historical data, around 55 to 60% of the time, okay, around 60% of the time in Bank Nifty, the low of the day or the high of the day established within the first 30 minutes. I am saying it is with respect to the past 10-year backtested data. The first 30 minutes will decide the low and high of the day. So that's why it is important to understand what is happening within first 30 minutes. Yep, that's a very good question. Okay, SAP is asking, can you explain the context of trap sellers and buyers? Well, that's what I explained here. For example, assume, okay, so this is a strong resistance, okay, and it is not like a secret. It is evident and it is very clearly available and visible to everyone to monitor, right? Most of the people will be monitoring it, so it is not a hidden level. So when price approaches to this, there will be a lot of activity. Why? Because the same level people will consider it to keep their stop losses. Some people will, keep their limit orders. So there will be a lot of happening. That's the importance of support and resistance. So basically assume that this is a resistance, price is presently here. When price approaches to this level, two things can happen. Either it can break this level and continue to trade in the breakout direction, or it can fail to trade and again fall back below the resistance. In that case, we can expect the downward momentum. This is the only two actions that can happen. Okay, so assume that when this particular case happens, when this particular thing happens here, assume this is a this is a 15-minute candle that have broken the resistance. Okay, when you see the footprint chart, that's the wonderful way of looking into the footprint charts during this period. Assume that as per the profile of footprint, you are seeing more of the transactions happening here. In most of the cases it happens. If that is a buying orders, that's a caution. Okay, so at any given point of time, the break of this particular level can bring the upper momentum, because the one who entered as an aggressive buy order here can defend their position and market can move in the breakout direction. Possibility of market moving in the breakout direction is quite high. And similarly, if in this case, okay, the same maximum buy orders got placed here and market, instead of moving upward direction, market started to falling and started to accept below this particular level, that indicates a weakness of the buyers who entered here. In the second case, second example, we can call the sellers, we can call the buyers who entered here as a weak buyers or a trapped buyers. Okay, so I hope that point is clear. The same goes with a support level, you can relate to that. So opposite is the same. So we are seeing a maximum number of selling orders here. Instead of market moving in the downward direction, market started moving in the opposite direction. That means that indicates possibility of a trap for the sellers who took short positions below the support. Is that clear? Yes. Any questions? Any intraday strategy, please, for NF BNF using, that's what I mean, stick to the context. Okay, so that's what I said. The first step is to identify the trend, where you will identify which way the market is primarily trending and you will try to align with the trend. And second, you need to identify the support and resistances, immediate available support and resistances, and then you can simply wait for price to approach to those levels according to the context, and you can simply align with that particular trend. Yeah, it was very choppy today. All right, yeah, just a moment. Just a moment. Yeah, the overall first 30 minute, this is an information that is very critical. So basically we are seeing a sellers at this particular level, okay, at this particular level, and we are again seeing a buyers at this particular level. So which clearly indicates that there is an indecisiveness in the first 1 hour itself. The first 30 minute there was an aggressive sell and aggressive buy at the same time. So the first 1 hour itself has given a hint that the possibility of market moving in the sideways direction is quite high. So that's the benefit of using footprint charts. Okay, so I was using a 30-minute chart, so usually I keep it as 15-minute. Okay, so I hope that is clear. Well, if you have any particular questions, feel free to ask. Yeah, shall we stay away or is there any way to trade? See, the intention of trader is not to trade every day. Please understand, you if you are an intraday trader or full-time trader, that doesn't necessarily mean that you have to take every single trade. You have to wait for the right opportunity, and then when there is an opportunity evolve, then you take the action. So if there is no trade, then no trade. I mean, see, for example, Nifty, for example, in this case, after 1 hour, there was complete kind of a sideways. I mean, there was not much of happening. So in that case, it is better to avoid a trade. So either it didn't decisively approach the high or the low after the first 1 hour. So there was no decisive approach in the entire action itself. So in that case, it's better to stay away. Or if you at all want to take a trade or take decisions, you can simply work on strangles or basically the option selling strategies. All right. Cool. If you have any particular questions, feel free to ask. By the way, how many of you are already using Bookmap Pro version charts? How many of you are using it? And how many of you are familiar with this tool before attending this session? Okay, ProAd is using, ASAP is using. How many of you are familiar with order flow tools before this particular session? New to this, okay, cool. ASAP is using, cool. So it will be very interesting when price approaches to this zone. It will be interesting to see the action. At the present moment, it's kind of kind of a no trade opportunity, because see, even though if you take long trades, the room that you have here for targets is very less. In that case, it is better to avoid such kind of conditions. One thing is that you are going against to the market, and yeah, I mean, in that case, price approaches to this level, there will be a lot of happening, and then you can take decisions with respect to the evolving patterns in the order flow information. Okay, so I want to quickly just a moment, I want to quickly rewind the entire session. So basically today we have discussed about the framework, how to look into that, basically the trend, location, and entry and exits. And then we looked into the information of absorption today, and also BBO indicator in Bookmap, and footprint charts. These are the important information that we have discussed today so far. And if you have any particular questions with respect to any of the information that I have shared so far, if you have any questions, you can please ask in the comment section. So we have time till another 2 minutes. So if there are any questions, I will try to take that. Yes, so day high and day low and VWAP are the key area, right? Yes. Obviously, for intraday trader, you can see that in the live market itself, when market approaches to VWAP, there was a pullback. So VWAP plays a very critical role for any particular intraday trader, and of course, day high and day low. There is one more wonderful tool offered by Bookmap, which calls it as price high and low. So by default, it will help you to identify the high and low of the day. So for example, in this case, this was the low. Okay, for example, here is where I have drawn that. Just a moment. Yeah, so day high, day low, this is the day high, this is the day low. So by default, this will be identified when you enable the price level indicator, and if you enable the 100% and 0%. So 100% indicates the day high, 0% indicates the day low level. You can also configure the levels based on the percentage. If you want 50% position, you can simply enable the mid range, which will help you to identify the middle price level. So I'm presently enabled the high and low of the day, which will help you to identify the dynamic highs and low of that particular day. All right, so I hope today's discussion added value. Thank you so much for your wonderful time. Keep attending these kind of sessions, so there will be a lot of learnings with respect to the dynamics of market. And if you like the today's information, please share this information with your friends so that they can also get benefit from the informations that we have shared in this session. So once again, thank you so much for your wonderful time, and see you in the next session. Until then, take care.